Greetings, market rebels. Welcome to this week's sector situation. This is actually our Sunday, April 7th, 2024 video that will be going out on that day, but I am recording it at about 10:05 on Friday, the 5th. We just had expiration for the week, and I'm chock full this weekend. I've just got so much going on that I thought I'd better get these taken care of now because I doubt I'd get them done in time on Sunday. So hopefully that'll all work out. Again, I'm Wayne, and I just finished up the macro measure about an hour ago, or I should say about 40 minutes ago. Here's our trusty disclaimer. Here's our trusty intellectual property rights notice. And then here is the macro measure notes for the week in case I reference any of those or you like to skip macro measure because you find it too long. At least you've got the notes that we talked about. Hopefully you can cover those, but I think it's just a big change this week, potentially, right? That we saw in the market. And I think we'll see that in the sectors that we'll be covering right now. So let me just do the old stop share on that one, and then we'll reposition things. And hopefully my browser with my wife's picture won't show up again. Try to keep this professional and all that. I'm not sure what happened. I had a nice tab ready for us last time, but we got sidetracked, or I must have clicked and actually clicked it away by accident. So let me see. Screen 3 is what we'll need. So I'm actually starting out with a look at the unusual activity elite. In other words, our UOA room, where our analysts push through all the UOA that they investigate and find to be noteworthy. So I guess you could call it curated UOA. And all I'm really going to do here is try to bring up things like this, basic materials for the week. And you'll just see that there were a lot of hits here. And this does include some of the silver, precious metal stocks, I should say. And some of those companies naturally mine for other things and deal in other things. But there has been a lot of activity in here. And just as when the charts started to shift about 6 weeks to 2 months ago, it really started to pick up, and it's really stayed strong. And I've been finding myself just continuing to add a lot of ideas from this space, because the paper's been there and the charts have been very strong, right? So it's been really interesting in that sector. That was a sector for the longest time we just kind of kept our distance from, because we don't really like trading it to the downside as much, and we didn't like the action in the charts for the longest time. But that did start to flip around, as I noted. Another one that's really flipped around in the last couple of months that we were fortunate enough to see, I think, from the sector work that we do. This early stages it was kept threatening and then doing nothing, kept threatening, doing nothing. But that was energy, and then it finally started to do something, and it's been remarkably strong and relentless. And there's just been a ton of paper. If you come back and look at some of this stuff in here, it's been predominantly bullish. We do see a lot of hedging that goes on in the ETF. So a lot of times they'll buy names. Presumably they'll buy the equities themselves and then hedge it in the XLE and some other things like that. But really, this is just all from this week. You can see there's a lot of bullish activity that's been shaping up in that space. So we continue to see that, continue to add that, And then let me think about, there was one other sector I really wanted I think I wanted to try to cover the ETFs. So interestingly, we don't always see big trading in the spiders and IWM, but there was a lot that really started to hit the tape this week. Now, it did start to perk up late last week as well, but you could see there was a lot of larger trades that went on in SPY and in IWM. Very active this week and last week. So as I typically note, when we see that, we often really are double secret extra ready to go, because usually these guys are pretty good. Like when they're active, something usually starts to unfold not too long after, or it could be unfolding at that point, usually. So with that, I'm just going to now jump to the charts, and we'll get started with our our group of 12, grid of 12 we typically start with. And right now, I just wanted to note that it's getting really tough, right, to add energy names due to the RSI reading, due to this relentless move that this has made. That's the first thing I would note about what we just talked about, because this I have to put just a qualifier in there. Short term overbought. You just got to be careful when you enter at this advanced stage of a rally, right? It might just be phase one, right? It could just be wave one unfolding right here, but for this particular phase, it's been going on for some time. The real breakout didn't really happen, I think, until the start of March, end of February, right about there. And then we were kind of waiting for that. If it did happen, we're putting in slightly higher highs and higher lows, but it's really been powerhousing. And so it's really good when you get alignment from uh, your sector charts, your individual names within the sector, and of course UOA hits, and the market stays buoyant, which it has. It's usually really good stuff, and it's been pretty good stuff. It hasn't been screaming, "Hey, I just made 384% type trades," but it's been a good grind for a lot of things that have worked out, I think, overall. The same thing actually in XLF. That did falter a little bit this week, I think, with yields doing what they did, but that was really overbought for a while. We noted that for quite some time. It was acting a lot like energy, and then it finally, the last week or so, finally started to roll over a little bit. But that's the other big, I think, message from the grid of 12 is that if we look at it, a lot of things finally started to roll over a little bit. So X real estate, that started to roll over, right? That's sensitive to rates theoretically. That did start rolling over, especially right when we had the TNX shot up early in the week and then kind of dawdled around, pulled back small, and then closed the week strong. TNX, I'm referring to the 10-year yield, but this had a rough week. It's got a lower high put in, and now it's making a lower low. And this is clearly a support level like we've got here in orange at 37.65. That to me isn't be all end all, but yeah, you could really start seeing bigger trouble should you crack there. Naturally, if you crack this low back here from 213, the low there looks like it's 37.08. So below 37 would seem to be a problem. And just like the major index ETFs, there's a lot of gaps that got left on the way up in so many things. So you've got to be on guard. We covered macro measure, how you've got to be on guard regardless of what happens, right? You could have false breakout to the upside if they move things up beyond the 10-day, or I think it was Wednesday's high in some of the major index ETFs. And you could have a breakdown if they take out the 50 or the lows of the week. I'll put it that way, that were set this week. But defensive sector like XLV, because it had done so well, sort of double topped, rolled over more. We had sort of a double top in XLY, and that rolled over, and it's on support. XLP, just a rough, really a rough week. And transports with a kind of false breakout attempt and reversal. So that's worth noting. I think XLC, which has been just powerhousing, it's still probably one of the best looking sectors overall, but it would probably be one of those things where if we do really see somewhat more of a market sell-off, they'd probably eventually find it and bring it in a little. But I think XLK is a little ahead of it. You can see that it didn't really enjoy the new highs. We've been noting that this was really a big time leadership sector, and it's been really has lost its swagger. And there's nothing disastrous there yet, but it's right. The low of last week is a big deal. Cracking there, I think, opens it up, or I shouldn't say last week, the low of this week that we're still in since it's Friday, but that's Thursday. If you take out Thursday's low there, that's problematic. Utilities, I don't know. Maybe they continue to be bid because it's certainly not from rates falling that they're being bid. So maybe it's defensive positioning. Maybe that's why XLP was able to do what it did, but then just maybe some money rotated out of it. I don't know. We have been noting too that XLB and XLI are both really have been very strong. So there's a lot of people that have been making arguments that basic materials are way too cheap relative to stock prices. So maybe there's been somewhat of a rotation there. This one's the one that's got me probably baffled because of the weightings and certain companies in here. But I'm just surprised that industrials have been able to do as well as they have. And there's just no doubting, right, that they have been doing well and they really refuse to. They're not, they're certainly not moving up, right? The last couple of weeks have been more of a digestion situation, but right, you're barely removed from the highest high that they've logged. So right now, it could be, well, if you look at some oscillators, there's weakness that continues to develop here, and I wouldn't doubt that. It's just that from sort of a support and resistance perspective, I think you have to wait for Thursday's low before you start picking a fight with this thing, because it just doesn't want to go down. I mean, like I said, it's barely removed from the highest highs. It even made a new high. Now, I think there's definitely the chance for more of a rollover. I've been saying that I think if we're going to have the typical fourth year of this presidential cycle, seasonality, cyclicality, whatever you want to call it, kick in, it should really happen pretty much now. Like, and it kind of maybe started this week. We'll only be able to tell when we look back on it, but it would fit. The only problem is, like I said last week, you don't usually see support without a really good, strong reason. Usually the first visit to support is met with buying and that a bounce. So it could even be intraday only, but sometimes it's multi-day, and then you get this reflexive buy the dip and it holds. That's continued to happen into some extent. But that's what I would say, without really like yield spiking, banking system problems somewhere. Maybe it's the regionals here, maybe it's abroad in some other way, maybe it's geopolitical problems. Without that kind of thing, or something completely out of the blue, excuse me. Usually when you get down to a support level for the first time, it will find a way to hold, and there's usually some kind of a bounce, like I said, be it multi-day, be it intraday. So having said that, let's get ourselves into a basic but more descriptive chart. Move the sectors over and out of the way so I can reference those. But interestingly enough, we are stuck on the big picture stuff that I barely dabbled into, I think a little bit in macro measure. And we may as well cover this now since it's here. But remember, this and gold, we talked about this in the fall when these things were finally starting to assert themselves. We're looking at, you were dipping down. You had this strong reversal on the monthly candle in October. Then they started to perk up here, and we were thinking, right, there's this big cup and handle. If this thing starts to fire, there's just a ton of potential here. And the same thing's really true. I'll try to just pull up GLD, but I think we looked at the gold, continuous gold future through Thinkorswim in macro measure, but it doesn't really matter. I mean, the pattern, as long as we have enough data, the pattern is going to be there. And I'm not really concerned about prices so much as I just am flashing this because it's only anecdotal, but over the course of my career, I've had a lot of success and seen a lot of cup and handle patterns deliver the goods. So that to me is encouraging. If finally, right, that we started to see again in the fall, things stop sliding, found support, and then there was maybe the working its way up towards these highs and maybe breaking out. And that's really what's happening here. And so this being, over a decade in tracing out, that's powerful, and it could really carry for a while. I mean, I think the potential of it is great, and I think it's only getting started. The question is, do we have to have a breakout and a pullback to the top of the handle, touch it, reverse, and go? You just never know. Sometimes macro developments being what they are, you don't get that chance. You just got to stick with it now. Other times you do get that chance, and it even corrects more than that. So it's never really super easy, but you can see how powerful it's been lately. We've had a lot of, again, paper in the sector. We put those in, so hopefully folks are doing well on those. But you really can't argue with the turn it finally took lately. Finally started to perk up. It was getting slowly working its way, right, consolidating and working its way through that handle of that cup, but now it's really fired, at least initially. So this is good. We talked about a resumption potentially a couple weeks back, and it did. So it's doing its thing. I mean, I can't really complain about that. So overall, those have looked really good. But if we go to the excuse me, the sector for that is XAU, and this is the Philly gold silver index and ETF, and this is one that I used to I didn't trade it myself, but I was not far away from where it traded when I was during my floor days. But this one, right, just kind of confirming, just looking at the sector itself. So really, just really strong moves. So there's been this big move into this, and there's been apparently a lot of central bank buying. There was central bank buying, excuse me, allergy season here. There was central bank buying during the lull though as well, but I guess maybe some of them are intensifying now that it's behaving a lot better. I'm not sure about that, but other than the only thing I can really say about it is that right now it's becoming a tougher ad just because right it's got a 74 on the RSI right now. So I think overall there's the long-term bigger picture type charts, they are fine. They're not overbought yet, but daily is overbought. So again, you when you get to this stage, right? I used to ask myself if I came across something now and said, "Oh, that looks really good," right? Where was I if I'm doing my job? Where was I on February 29th? Or maybe even on March 1st? Where was I then? Because that was right the early stage stuff that was happening. Really strong push, that started to develop there. So this is the early innings, and this is certainly can't, if this is the early innings on a daily basis, this can't be the early innings, right? Because look how far we ran and how little time we've done it in. It still, though, could be on a big picture chart, maybe like a monthly or quarterly chart. It could still be the very early innings. So it's interesting. It all depends on how you want to look at it. But I'm adding that little qualifier right now that if I do add a bullish name, like, hey, be real careful about this because you're already overbought. But hard to say anything bad about it when it closes at the high and remains as relentless, as it has. So let's now move away from that sector. Since I started there, usually kind of finished near there, but that's where the chart was. So it maybe saved us a little time. Energy's got the same qualifier, right? Because I've got an 84 rounded RSI reading on the daily and the weekly starting to get overbought, right? So, and these bands have widened and they're not super wide, but you're well beyond the upper Bollinger too, and that's has widened. If I bring more time in, I'll bring a little more time in on this for us, just a 1 year chart. And you can see that the bands are not as wide as they've been over the last year. There have been other times where they've been wider, but they certainly have widened out from where they were. And you're quite far removed from the upper band. So this is still, I would still, right, until it cracks something, be more of a bull. But we can't kid ourselves and act again like this is the early innings here. If you're writing this stuff, right? I was just having a discussion with Ryan between macro measure and recording this sector situation, talking about some things we're working on, and it had to do with helping folks with position management. And I basically have a philosophy that as the move wears on, I become less aggressive, right? Because I feel like if you're evaluating things on a daily basis, you have to say, well, again, this is not the early innings. I can't really, something doesn't go up relentlessly, virtually day after day after day for too much longer than we have over the last month plus. So I'm going to be willing to go along with this as long as the momentum's there, but I'm going to be a very quick roller, right? And I might be a trimmer if I enter a new trade, right? I might buy 10 calls and sell 3 quickly and then roll the rest quickly, compared to how I would normally let it work and breathe more, just because it's not, in my opinion, at an early stage. But overall, right, I think you have to say that overall there's still potential there, And this is a good sign in a way. If this is reflective of the world economy, I don't have the time to look at the details of what's going on, unfortunately, but leaving this kind of triangular consolidation and then breaking out from it, you had an incoming uptrend. Excuse me, looking at this weekly chart, this does portend bigger things, but this is really not good in terms of inflation and what's happening with the consumer. So it could be good for global, I guess, trade, maybe, or it could be there could be specifics to the oil market right now that are just creating problems and driving this price up more so, right, than really ultimately global demand will justify. So you'd have to dig into that. I know we have some folks in the rebel pit. Uh, they call him Captain Crude, our friend Jim, who does a great job in this sector. But he's, I think it's one of his main foci, actually. So having said that, you kind of know where we stand on that, right? I'm not fighting against that in a big way, but if I do go along with that, I'm going to be smart and prudent about how I handle that. XLK, right? This is a rollover. I mean, at this point, it's threatening a rollover and it's threatening to lose trend. So I'll give this reminder and try to stop myself from giving it 10 times in this sector situation video like I did in macro measure, but just remember, we're not the only ones that see this. This is a long time coming. It's a former leadership sector. It's a crowded trade. There's a lot of people that got long. The public got long big time recently. They were the longest they've ever been, this type of thing. Hedgies have gotten short like they always do, a little too early. There's potential for another false breakdown move and a reversal. There's also the potential for a real breakdown. But if the worst thing that ever happens to you is you trade the breakdown below Thursday's low, you buy 10 puts, you get a nice drop to our first target level, you sell two, and the remaining eight make it to the 100-day there, the dash white line, and you make a bundle on that eight lot that you held, 80% of your holdings, you can come complain to me and I'll laugh at you because you had a great trade, right? I'm just saying that if you put a little cushion in, if they do try to drop things and you get a little chance to take a small profit, this way, if they play a little game with you, you can kind of get out for even or maybe eke out a small profit and then get ready to reload with a positive mindset. If you don't do anything and it dips, and then they find a way to rip this thing back up in your face, which they're very good at doing. Now you're underwater and you want to know why you try to pick the top and go with this counter trend trade. And now you're ticked off and maybe you out of frustration close and you don't even want to look at XLK. And then finally it gives way. That's what these guys are the masters of doing. And that's why I'm telling you just to combat it with a situation where you win either way. How do you win either way? Well, if you bought 10 and you trim two, and then it goes back up, at least you trim two and you get out for even. On the flip side, if it keeps going, you're still a nice winner. Either way, you're a winner, right? It's versus where you would have been had you held on and they jammed it in your face. That's all I'm saying. But this is taking a turn that you can't really ignore. And I've been telling you that I do think I've been sensing distribution has been happening in areas of the market as the market's lost its vigor, as these sectors have lost their swagger, as the leaders have done their thing. But really, right, if you look at it, this is why you have to be dynamic in your thinking. You might believe all that's true, and I do, but very quickly, right, how would you feel if they start taking this thing back up? You'd have to say, well, geez, they barely gave anything back, really. So that's reflective of a strong market, whether it's partially artificial, maybe it's bogus in the long run. It doesn't really matter. But strong markets do not give much up in the forms of retracement, right? That's what keeps them strong. So if you see just a false breakdown and reversal, and you look back and say they moved this thing from here all the way to here, and the biggest pullback recently was just this X%, that's not that big of a deal. It means they held on to most of the gains and they're maybe ready to run again. So that would really, to me, like, is as challenging as it looks, you've got to be ready to shift your thinking and say, well, the Bulls barely let them have anything when the Bears had their chance, and now earnings are coming up in the middle of the month. And so when the Bears had their chance, they didn't do much with it. That's not a good sign for Bears, right? That's the way it can flip. And if they hear things they want to hear on these earnings conference calls at mid-month and things like that, it could be a whole nother round of squeezing if people overstay their welcome. If, however, CEOs send out warning flares to these analysts and people on the call, well, we had a good quarter, because they almost always do, but we also are concerned about what we're seeing out of the consumer, that's a totally different story, right? But that could even be spun into, well, that must surely mean rates lower sooner. But again, it's pretty hard to do that when some of the data just doesn't want to give that up yet. Anyway, XLC, can't really say much bad about this, right? It's been looking great for a long time. It did consolidate. We noted that. It did put the higher low in there. Then it broke out, right? Then it backed up to kind of the breakout level, held, and then went again. So it's acting very bullishly, but right, it is on the cusp of correcting. I think you could see the line I drew. Then so that's really the 15 SMA. If you add that on your chart, this is the 20 in light blue. That would be the big deal area, and that's nearby. Clearly, the 50 would be the biggest of them all, though. If it cracks that, and the market itself is really under pressure, then you know that that's where the real room gets open, because there's just not a lot of price action, price structure that really is going to say, well, there was a lot of support there. You might see some where it hesitated near 76-ish, but other than that, once you get down below the 50, you've got 78, let's call it 76, and then you've got to work your way down towards this. You'd be down towards the 100-day. So I think I'm sticking with 76. After that, you just don't have much until you go down another couple of bucks, right? So it's almost like every couple of dollars seems to matter in there technically right now. But right now, right, if you did something, you'd be counter trend trading it, and you haven't even broken anything. So you have to wait. In my book, at least, you got to wait for a break. Otherwise, you're getting in prematurely, and it's very hard to do that and win consistently. But that doesn't mean it can't be done. Financials, we were saying it, they were ridiculous. They were very overbought. They would not back off. I was adding some names in here. Just overbought in the sense that, was it a really high RSI reading? No. But was it a high RSI reading? Yes. The weekly was overbought in there along with the daily. And because of how long this thing and how relentless it's been, that too, right there, that also rolled over. That is threatening. So you can see that these things that I think we detected some things about the loss of momentum, different things, the cycles that are out there, little things that, right, that helped us a little bit to say this could be coming, that there could be a possible rollover, maybe a break in the market. So I think we weren't caught off guard, which is good, but I wouldn't do a victory lap on this, because, right, like how much have we really seen in terms of bear side activity? Not that much, at this point. It could change a lot next week, but as of now, I don't think I think the Bears are maybe still trying to take control, and it's unsettled as to who has control right now. I think it's more of a, we got to wait for the next move to develop up or down to say, okay, well, these guys won. Right now, I think it's still being decided. XLRE, this is obviously rate sensitive. This is definitely taking a turn for the worse. It's got that lower high in as well, which is the second one versus here. Okay, so that's not looking so good. It's below the 50 already, fell below the 100, made a new low today. They rip it back up to the 100, and they're testing what was support from the underside. If it doesn't get through there, and it might struggle because a lot of SMAs are waiting for it, if it doesn't get through there and reverses back down, not good. Probably looking at testing the 200 in purple down there. And again, this is not a big vehicle. It's not like we're going in here. We're just trying to evaluate this from a macro perspective. So, right, it doesn't look good. And TNX, on the other hand, is moving higher and has been for this year, kind of like stealthily, right? If you listen to the rhetoric, you would think that rates are, about to plunge. and maybe they will, but they've been saying this for so long, and rates are moving up. There's the trend of the TNX, right? There's your yield basically. So that is moving higher, at this point, and it even closed at a new high, a new recent high. So that's XLRE, right? That the yields are trending up. XLRE looks like it's struggling. XHB, we've seen paper in there. It seems like maybe players have been either hedging or anticipating a fall. They've been wrong in terms of if they were buying for an aggressive pullback, but wrong to this point, I should say. Were they right to hedge? Maybe, we don't know. Some of the paper is still out there in the form of open interest, but certainly, right, you can see that there's potential there. It got a little haywire to the upside there. Probably came in, I don't know, on that day wherever they had it, but in terms of RSI, but it was at 70 on that high. Got a little bit overbought by the slightest bit. But I think what you're looking at here is it's an interesting thing because this former resistance line would come in here. So you could trade the short-term breakdown below Thursday's low, which is really the week's low. But if you look at this line, which I would personally would extend out to there, that's probably the real crack. You probably really need to crack the line, frankly. And I know people hate lines, but I don't, so I mention them. It needs to crack this line in my book to really have a shot at the 50. That it's obvious, right, that it has to do that. But to me, like, this could be a bigger battle than a lot of people would give it credit for, because I also think there's a flat line support that's somewhere in near there as well. So take it for what it's worth. But that showed some signs that it had a little bit of a rough week. And that's on the precipice of possibly breaking down. So another thing worth noting right there with related to XLRE. We do look at wood and cut usually when we're doing sector situation. Those are also looking right vulnerable. I mean, I think you can see that just without even me putting any lines or anything on there. They're not. I wouldn't say that they've fallen apart, but you could see that they're holding support ever so slightly. And so if they roll over, not a good sign, right, overall, along with the rest of the stuff that we're looking at. There was some activity on the put side in XHB in UOA this week as well. Just as a note, a sector that was crushing it, excuse me, kind of did the old double, triple top type thing. And this has since struggled. And you could see it was losing momentum when it made that final top, and it's rolled over as well. Now, this is usually, right, somewhat of a defensive area at times, but I think it's a victim of its own success at this point. And I think maybe there was some profit taking, maybe there was some sector rotation to other places because it did enjoy such a strong move. And maybe money wanted to go to something that was more, I don't know, more intriguing. But that broke down. That's the kind of thing that happens when you break below the 50 and there's not a lot of support nearby, and you do kind of work your way down towards the next level. So I would expect it, excuse me, to try to work its way towards about 141-ish, not too far down. If that doesn't hold, then you may as well look towards the 100-day. That would be I know that a lot of people aren't trading that, but if you're trading off it and you want to evaluate the sector because you're in a certain stock and you want to see if the sector, which the reason why, by the way, the reason I look at these is because I feel like commentators can influence any one stock and big players can come in and they can do this and that and they can push around any one stock. But usually, right, the institutions kind of working in the aggregate, I guess you could say, are the ones that are going to really move an entire sector. So we're really trying to look at what the institutional take is on things when we look at this. At least I've convinced myself of that in my own mind. Anyway, XLP, Staples, again, another defensive name ETF wise, but you could see even those, right, have had a rough week. That's the phenomena right there. Break below the 50 in gold and then come back up from the underside and test it. Now, if it doesn't get back above here, this is not a good sign if it just starts going from there, because that would be kind of like the intraday test. I should say 1-day test where you break down, come back up, can't get through, and then it kind of confirms it as resistance now. And then you're back on your way to lower, right? Probably into flat lines, Fibonacci retracements, or the SMA here in the form of the 100. And again, this is really not about trading the XLP. I really doubt, like, a lot of people are out there on Sunday night having a hard time sleeping about how much they're going to be wheeling and dealing in XLP. But again, I think it's worth looking at, because if this sector is just another sector that's potentially breaking down, there's been a good run. Like, that's part of our argument as to why this could happen, is that it's been a very long, in many cases, uninterrupted run in many sectors, and also many individual names. We're due for something. This is the time of the year, in the fourth year of the presidential election cycle, this should happen. Also, it's sort of percentile wise how long and historic this rally's been. You're really not, it's not the most egregious, let's say, but it's definitely something that's due for a little bit more than a 1 or 2% pullback, which is just about all we've seen since the lows were put in, mainly in October. XLP, now we always move on to XLY. It's more risky buddy, right? It's riskier buddy. This is discretionary names, and this is really more risk off, risk on type stuff, right? So we saw risk off this week in the market to a degree, and this also had a rough week along with XLP. So both of them kind of went into a risk off mode. It's not the end of the world here. I can very easily see kind of like a rising wedge maybe in this thing's future if it doesn't break down further. So that could end up being bad for it, but at the same time, it could end up being good for it. So I don't have any real bones to pick there, but right, if you see people pulling money out of this or willing to go short it, that means that they're a little concerned potentially about the consumer and the consumer's marginal dollar. I don't know what just happened there. We had a little flash on my screen. But anyway, if that's the case, right, that's not a good sign. I do think this is a rough start to the month. It was a rough week, and it was a rough it's a rough development falling below the golden 50 there. So the good news for bulls is that it did it on a gap. And so a lot of times within 5 days, there is an attempt to close. Well, actually, maybe it did close the gap on Thursday. I didn't realize the candle wick got that high. 182. Let's see what the low is. 182, 181.85. So my bad. It already did close the gap. I was going to say within 5 days is your best chance, right? For when the gap happens, within 5 days is your best chance of getting the gap closed. And after that, the research we've done says that it's not really a factor until it's really technically heading back in that direction and has a setup that would justify maybe making the move to fill it, which can happen weeks, months, even years later, but it already did fill it. But look, you still have a higher low by the skin of your teeth. So until it breaks Thursday's low, there's nothing really atrocious there at the moment. At the same time, you have to be concerned that it's taking the slide. It could be ripped right back up again. Obviously, we talked about the false breakdowns, but to me, right, this is another one that's on the precipice. So the bulls have their work cut out for them. That's another way to put it, right? If they don't want to risk more technically motivated selling, they need to step into this market pretty soon and prevent any more downside, and then maybe bridge their way to these EPS releases and then do another victory dance. That's probably what they need to do. Otherwise, right, there could be a really rough week that develops, and they'd have to then potentially use the EPS reactions to create squeezes if people that didn't overstay, if people overstayed their shorty welcome. This, right, transports, we've been watching this. Disappointing that it wasn't really able to join the market's party more. This is one of the things that we've been noting really stuck out in terms of like, there's a problem there. That's not good. IWM's not good. Everything else, like I said last week, rarely does it look better, right? Which again, should really be a contrarian flag. When you hear that, you should say, uh-oh, because there's a reason why people phrase it that way. And it's not because they're really bullish. It's usually because they're saying it doesn't get too much better, because it just doesn't get too much better. So that means you're really due for something. Maybe we've gotten it though, right? We don't want to fail to mention that this week was a little troubling beyond, beyond the major index ETFs really not cracking. Some individual names did, and some sectors look worse for the wear. We can see that in some just look like they're on the precipice. So it should be an interesting week next week. Basic materials, these have been crushing it, right? Remember that some of those metals stocks we talked about, the UOA, better looking charts over the past couple of months, they're a part of this. So that's helping this in some ways as well. We've had uranium as a trade. We've had, there's trying to think of other ones. I think we had FCX. At least we had paper on it. I think I put an idea on that. Not sure like how all these things played out, but other names too. But you really can't complain. You're barely off the highs on that one, right? So I would watch the 20-day there in light blue at 91.49 right now. I think that's your demarcation point, right? Your demarcation level that would maybe open the doors to worse stuff. But this would probably be one they're reluctant to want to sell because maybe it's considered undervalued. I've seen that argument that versus where many other stocks are and other groups are within the market, this is dirt cheap still, despite what it's done. So that's the way that maybe some fund managers that run billions and billions and billions of dollars are looking at it. So they might be reluctant to sell because they really still think it's a buy, let alone a hold. And maybe the only reason why this one would crack would be because selling begets selling, just like buying begets buying. So if they really do start driving the market down somehow, maybe that finally gives some of it up. But I think that would be a reluctant one, just like XLI, because you're barely removed from the highest high. You're barely off that, right? So these charts look great. We did have an idea in the last 2 weeks in CAT. I think it was good until today, or maybe next week. It might be good until next week. But there was bullish paper on CAT. I mean, it took me 2 seconds to look at that chart, and I kind of knew from memory, like, of course, I'm putting in a bullish idea in CAT. As long as the market holds up, right, there's a good chance CAT's going to keep going because look at the trend of CAT. Look how strong it is. Look how it doesn't want to give anything back. So, there were other factors naturally that I evaluated in the charts to come to that conclusion, but it was almost a foregone conclusion 2 seconds after pulling it up, or really on my way to typing in the symbol, because it's just been a juggernaut. It really has. So XLU is kind of a rote thing, like we just sort of do our thing and mechanically check on it. But it is worth noting that this can be defensive, and the fact that rates have gone up, right, in the form of the TNX this year, and this has as well, it probably tells you that it is maybe being used for, because it normally would be down with rising rates, rate sensitive area. This would probably be a sign that there is some defensive positioning out there, right? So that would be something to keep in mind. Let me take a look at the VIX. It's worth noting here. This might have been better to note in macro measure, but I'll note it here. This might be interesting in the fact that, right, we really haven't had lately many closes up near this level in the VIX, right? Despite this being a down close, it's the second highest close we've had since the market bottom was put in, right? So Thursday was closed a little bit higher, but the fact that we just went into a weekend and the VIX kind of hung in there, that's another reason that we should really add to our weighing system to say, like, that maybe, right, these things we see on the precipice are real. The VIX took it seriously into the weekend. Usually it tucks tail, right, and runs for cover as you head into the weekend. That's been the pattern. So that's kind of interesting. The dollar, right, often people will scramble for the dollar, and if the dollar goes up, that's usually a problem for stocks. It overall did the old false breakout maneuver, the DXY did, and it's pulled back, and we have to see what's going on here. But if it does kind of hold on Thursday's low and starts to go again, right, then you have the makings of maybe a higher low and then maybe a breakout with a higher high, which I don't think would bode well for the market. Just like if TNX manages to hold its intermediate term complexion, because this is sort of slowly, kind of stealthily working its way back up as of now. And it's actually holding on what was former resistance. It backed up to there, held as support, and bounced today. And it too closed at the highest level that it has since the fall. So these are interesting developments where I wouldn't write off this, oh, just another dip buy. I think you've got to take this a little bit more seriously, the way that these charts look right now across the market. Again, I am not a table pounder. I'm not predicting that there's this crushing of the market. I do think the potential is there for it. But at the same time, you have to remember that we have earnings where the S&P, 7 of the 11 sectors, the earnings were revised, expectations, consensus was effectively revised down. So the bar is going to be easier to jump over as a result of that. You also have easy money conditions, easy financial conditions, despite all the jawboning, the rhetoric, and the obsession with what Powell and company are going to do. The fact remains that financial conditions are easier than when they started tightening at the Fed. So the irony, right, of that, but that's usually helps equity prices move higher. So you've got really a couple things that are set up to help equity prices despite the presidential election cycle calendar, despite the issues that we see here. And I don't think, right, there's nothing really, as I've been saying, like I have no problem with the breadth that we've seen, right? I don't think that I know there's some issues. I shouldn't say no problem. I know there's some minor problems people are pointing out, and a lot of things haven't been acting as well as they have in prior markets. And I don't dismiss that. I'm just saying that when the basic stuff that we look at when we look at this breadth screen, I've seen times where there's the chance for what I would call a major dislocation to the downside, because the market has just been so narrow, and other things under the surface of the major index ETF levels that keep making new highs, they're really in heavy deterioration mode. I've seen that over the course of time several times in my market history. I don't see that as being atrocious or disastrous right now. It doesn't mean selling can't happen. All I'm saying is that's not something that I'm banking on because of the way these breadth measures look. They don't really look atrocious to me. So it could happen, but I don't think that I'm getting that extra kicker from the basic market breadth things that are on this particular screen that I usually flash. So it's nothing, nothing extraordinary that way. We did put something out a couple of weeks ago about how I think Sven Henrich had a tremendous tweet about how this bull market is very much unlike others in terms of the way that there's new highs forming. I think it was something along those lines, but I'd have to go back and check it. I think I have it bookmarked somewhere. But the point is, it does have some little curious things associated with it that don't portend to be very bullish, right? There are concerning little factors that I'm calling them little, but they might not be little, but they're kind of like, I don't know, I guess lower profile things, right? Than a lot of people talk about, but still they might be in the end, they might be worthy of mention, worthy of tracking, but I don't have that in front of me right now. So I think on that note, we covered a lot of futures. I think I did cover copper in the other video, things like that. But copper's acting better. Oil's been acting better. We saw that wood, lumber was acting better. What else was there? Gold, silver were acting better. A lot of things are just commodity-wise have been acting better. Everyone probably has heard that cocoa even outperformed NVIDIA this year. So that's been screaming, just been it's what it's been. So a lot of the materials guys are, I guess, happy, right? Because they were saying how they felt like some of these things were really undervalued, and a lot of them have really, really moved up, which is maybe a good trade, but when you get overbought, we tend to trade more in the short term rather than the long term in most of our services. Some of them are a little more longer term oriented, but I'm trying to think if there's anything else I can share that would help out. I think we covered nearly everything we normally covered. So I think I'm just going to end on that. And I'm going to just wish everyone a great weekend, a great week coming up in the market. Just be ready. I think it's really showtime. And you might really have to be on your toes, excuse me. And then we have earnings that come out, and then we'll see what comes out after that. And then we've got the Fed really in the heart of earnings season. We'll also have the Fed early May meeting sprung upon us as well. So there's a lot to look forward to. No time to go to sleep. Do not uh, sell the market short in May and go away. I don't mean directionally. I mean there could still be some really great trading opportunities all the way through May until earnings are really over and done with, and then usually June is not the best time to trade, but July often is really good if you like to get in there and do hand-to-hand combat with the earnings reactions that happen in the second half of July. That's often good trading, and then you get into August, which tends not to be, once the earnings season has really peaked, tends to be time to do some sky watching and catch some of the meteor showers and enjoy the last week of the summer, unofficial last week of the summer in August, when most of Wall Street is gone. But until we get to June, I think we still have the potential for a lot of really good trading opportunities. And we'll see what happens. Maybe June will even be different then. But I'm going to wish everyone again a great weekend, a great week ahead. We'll get back together again next weekend, and I want to thank everyone for tuning in. I hope you got something out of this that help you out this week or some week in the future. Thanks again.